Okay, perfect.
Okay, I think it's recording now.
Okay.
Right.
Yeah, it
So
is.
we start with the daily this daily chart. You can see, isn't it?
Yes.
So this daily chart, and we're looking at daily volume. So those lines that you see, red and blue lines, those are the volume, the open price of the volumes.
Okay.
So now, if you look at, oh man, I hate this shit. I'm running, MT4 does not work on Mac again. I have to use the VPS, my VPS to trade.
Oh,
So yeah, I keep on
wow.
having this always around weekends. I don't know why.
I've
Man.
never been a fan of Mac.
Yeah. Oh no, seriously. I'm thinking I'm going off. Next year I'm not using Mac. It's bullshit, I'm packing it somewhere. I'll give somebody to use. Then I'll get a full Microsoft PC
Mm-hmm.
because Charlie is slowing me down. All right. So you can see here are the volumes.
Yes.
Here are the volumes. Where are you? Where are you? It looks like this thing. Oh, wow, this thing won't disgrace me. Okay. Okay, so here are the volumes. Okay, here are the volumes. So you
Mm-hmm.
have this as a volume. So wherever you see the blue are the volumes. Now these are the monthly volumes. On a daily chart, these are the monthly volumes.
Okay.
Okay, so now what happened was on a Friday the market came all the way down here to test this volume here at this price.
Mm-hmm. Mm-hmm.
And you could see that it rejected it nicely. It couldn't close below it.
Mm-hmm.
So that was a ticket to know that okay, the market is accepting the volume here. It came to pick the volume from here and wanted to go up all the way up. So buying was from this level. Exactly when the market closed is where I want to buy from.
So what was your trigger? What was the reason for your trigger on the lower time frame?
Okay, yeah,
Or
I'm
you
going
just
there.
okay.
All right. So now the only thing is I'm going to the lower time frame. I'm going to the lower time frame. So that's 4 hours. Then I'm map the volume that I marked on the daily. So let's say on a daily, this was the volume on the daily. So this was the daily volume on the daily. So if
Yeah.
you go into 4 hour, you should have it a little bit low. So this was the daily volume. The
Mm-hmm.
one down here,
Mm-hmm.
that's the 13, 31,
Mm-hmm.
31.62. Okay. Hello?
Yeah. I was responding.
Oh,
Yeah.
okay.
Mm-hmm.
Now, so what happened is when I map it up to 4 hour, I realized that market rejected and came to test the 4 hour volume, which we have here,
Yeah.
So you see, this is where the volume came to play on 4 hour. So all
Mm-hmm.
that we are looking for is for the market to actually refuse closing below the volumes. So you see, like this is the daily volume and this is the 4 hour volume.
Mm-hmm. Mm-hmm.
So market totally rejected that price. It didn't close
Yes.
below it.
Right.
So I just simply started packing all the buys over here. So I was just packing all the buys. After as soon as the candle closed, I started packing my buys over there.
Mm, mm.
Then I left it. I don't know what happened, but I just left it. Then you wake up in the morning, boom, boom. On Sunday, everything just like this. But I got out too quickly on the buy because I was thinking this market was going to reverse for a particular reason. But so I took out my trade at this point.
Right.
Now I'll tell you why.
Did you use H1 for further confluence before you entered?
Actually yes. So H1 is my lowest time frame, but when I get 4 hour, I take it because I don't really have time going 1 hour. But because oh man, this is frustrating. Actually going into 1 hour to check exactly like the extra confirmation that I have over there, which actually gave me extra confirmation on the price action.
So did you get like was it an engulfing? Because I remember you said
yes, and the engulfing pattern as well. If you want to be less risky, then you wait for the engulfing. But if you want to go full risk, you can just trade without the engulfing.
Okay.
Making sure that your stop loss is always in place. So this is the trade. So you realize that this is where the market was playing with. Yeah. Market it didn't really engulf, but you realize that there was the market didn't
proper rejection. Yeah.
Yes. So the rejection is the most important thing before coming to the candlestick. You realize prices didn't close below the daily because this was a daily demand and this was a 4 hour. This was a 4 hour demand. The first point is prices didn't close below the daily demand. The first one. And secondly, the next candle came to close above the 4 hour. So that was a ticket to buy. That was another ticket to buy. Look, I mean, I had already made money selling, so that's why I left the buy.
Right.
Okay. So he came there. So on Monday, he came to play and do all this shakala. Then, boom. Okay, now I exit at this point because of this volume. You see this volume here, 34.24.
34.20. Yeah. Okay, yes.
Yeah, this volume here. Yeah, that's why I exit the trade form because I realized prices was not trying to close above it. So price came to close inside it, right?
Yeah.
Yeah, so I sold again. That's on Monday. So I sold after exiting the buy. I sold and made some profits out. And when I was selling, I was watching these volumes over here. So but first of all, before even I start Monday trade, I watch what happened on the previous week on 4 hour.
Right.
I checked the volume of the previous week on 4 hour. Yeah, this is not stop again. Oh man, this is very fucked up. Mark, I don't know. They really messed me up. Yeah, honestly, Mark has really messed me up. Okay, but you can see the chart, right?
Yes.
Okay, so you see that this was the previous week's volume. This was the previous week volume. So that's what I checked. I checked the previous week volume. It was prices. When market opened, markets were all above the previous week volume.
Right. Okay.
So my intention was to buy throughout.
I see.
Yes. So throughout the week, I'm just going to buy until markets come to break the zone and close further below the 4 hour zone. I don't consider selling, like holding myself for long, if I should say. I'll be selling, but I won't be playing with the sell for long. Yeah. So the whole
Makes sense.
yes, the whole thing is about you just making some quick money from the sell. So the sell came, then I took the sell. You see what the sell came to, the 4 hour zone before going up. So it was a clear setup here.
Right. Okay.
So in another sense, you wait for the candle to reject the volume nicely and reject it and actually close above the volume, signifying a continual buy. Now you realize that it came to close above the zone 2 as well. See the blue zone? Yeah, exactly. So that was the buy place for me again over here before market started running up. Now if you go into 1 hour, like where I took the trade from on 1 hour.
This was on Monday or Tuesday.
Yeah. No, actually the bar was on Tuesday. The next bar was on Tuesday.
Right. Okay.
Okay. Now let me show you the exact prices. So I was looking at these two volumes. Sorry for all this lagging in the VPS.
Oh, it's fine. That's why there is a recording. So at least I can listen again.
Okay. Oh, come on. Okay. So I have this. So you see the volume mark 32.75.
Yes.
Okay, that was the first volume. That was the Friday volume, and this was a Thursday volume. Come on, man. Don't do this. Very distance. Okay, so this was the Thursday volume. So you can see clearly what price did clearly why price came to test it. They didn't refuse to close below it. Then it rejected nice and close above it.
Yeah.
So another ticket to buy.
But this was what, around 7 a.m. in the morning.
Yeah. Around London session area there. So this was where the buy was coming. Now the stop loss will be just below the zone here, the volume here. That's what stop loss can be.
Okay.
Or you can have a fixed stop loss. I have a fixed stop loss though, 25 pips.
Okay.
So we can put a pending order at this. You see these prices, the 32.75 and the 32. You can put pending orders over there.
Wow.
To get a better price. Yeah.
But then you need to be sure that market would. Do you understand?
Exactly.
You need to be sure that.
Yes.
Yes.
That means if you don't want to be too risky about certain trades. Okay. So Yeah, so it was riding, blah blah blah. Then it came here. It came here to see. I marked another price here, right?
Mm-hmm.
Yeah, those were previous weeks this thing levels, and I was looking at it and see if I could sell and make some money. I made some losses, I think, yeah, because market came to hit my stop loss. Then year two, I was able to get some small profit from it before the market started running up again.
Okay.
Yeah, so you can see clearly too as well. Yeah, prices came to touch this volume, but close above it at the end. So this was another buy for me. So you realize I bought some. I had a buy around this day. I don't know if you saw it the last time I sent you.
Yeah, yeah.
Yeah, so that was what my buy was, and the buy had to rally and make some profit from it. So when everything is going like this, I'll be looking at the weekly range.
Mm-hmm.
The weekly range now, pound move between 200 to 250 pips in a week.
Yeah, the ADR. Yeah.
Yeah. So if you're able to capture 250 pips and plus more, you should know that prices might return, my pullback.
Yes.
Yes. So
but looking at your volume, so yesterday, the volume, where was the volume you took the trade from?
the sell.
Yes.
Okay. It was this very one. This was where I took the trade from. Prices came to break Thursday's volume. Okay. Hello.
Yeah, I'm here. I'm watching.
Okay. Then it play around. Sorry, play around. Came to play around. So Monday in the morning on Monday, this is what happened. It came to close. This was
on
the candle
Friday.
that closed below the zone.
Okay.
So this is what I bought, and I
sold
actually entered earlier in now because I knew what the market was expecting. I was expecting the market, but in terms of learning purposes, I would say you should wait for the candle to close outside the zone before you take your trade. But I started taking my trade around this level because I knew what the market wanted to do.
At least this gave over 50 pips.
Oh yeah. So it was a ride. It was a ride. It was playing around. I knew that was a typical Friday thing. So at the end, oh, hold on. Hello?
No worries.
Yes. Okay, I'll come for it. You're not serious. You are buy food. You want me to come and take the food for myself. Sorry. Hello? Larry.
I'm here.
I just
I'm here.
didn't come in the recording.
Oh dear Lord.
Okay, yeah, so that's it. So you see, after the market moved between 300 pips, but I was expecting a reversal because I knew the market will pull back within 250 pips going. From 200 to 250 pips going, I was expecting a reversal. So all what I was expecting is for the market to give me a sign to sell.
Right.
Yeah, and that was it. So I just took my quick pips and it came down. Now, whilst it was coming down, I was watching this volume. You see this volume here? And that's what the current market price is doing. You see, markets couldn't really close below the zone. Good, but I actually didn't buy because I'm actually done with the year. I'm not trading again. So you can see how clearly market rejected that zone. Yeah. So if I would say I could have taken a trade from here, then I'll leave it for the weekend. Maybe another gab again.
I mean, as long as there is stop loss.
Oh yeah. I mean, I'm not worried about that. Yeah. Money management. The lot size I use that wouldn't hurt me. Before the lot size I use, the market has to go against me 1,000 before I can blow my account. which eventually I don't think the market will allow the market to go against 1,000 pips.
I'm sure that won't happen.
Oh no. I mean, I won't allow it to go 1,000 pips and negative. So with the lot size that I have, I can actually make 10% every week.
Okay.
So eventually,
So the volumes they form. The volumes form after that the setup has happened. Yeah.
okay, the volumes I use previous volumes, not the current volume for the day.
Because like this GU now, the sell trade. At
Okay.
what point did the volume form?
The volume formed on Thursday, so it was Friday that I picked the trade. That was today.
Oh, okay.
I'm always using the previous day's volume, or the previous week's volume, or the previous month's volume.
Okay.
Yeah, to decide what's going to happen the next the next period.
Okay. So this volume formed yesterday, and then you waited to see what markets will do.
Yes.
So once markets broke this one with the blue thing underneath, the blue dots.
Yeah.
Yesterday,
Oh,
you
you have
then
seen
went.
it. Oh, you are smart. Okay.
Yes.
Yeah. So once it does this, then you are good.
Right.
Yeah.
Right.
So once it's beneath this, say okay. So this is what the volumes is. So the dots are where the volumes are.
Right. Okay.
So you can see this dot.
Okay.
So you can see how prices come, reject, blah blah blah. It was playing around, then before going up. Yeah, so this is what the dots are. So you see, even this particular one, markets came to touch it, came to play around a little bit before going up. So your ticket was to buy I at this place or buy here. There are two places to buy, either here or here. So the places to buy on this candle, while this candle break it, or buy on the second candle that broke. That was another place to buy, and the market started riding.
And where would you have put your stop loss?
Oh, just around the candles.
Well, so you see this particular trade, yeah? This one you are showing me.
Yeah.
The one that has 30, 33, 81, and 32, 64, or 20, whatever, 32, 26.
Yeah.
Where was the volume? Sorry, can you please show me again?
Okay, this was the first volume. This was the Tuesday volume. No, sorry, this was the Monday volume. This was the Tuesday volume.
Right. Okay.
No, prices broke Tuesday volume. No, this was actually a Tuesday trade, so I wouldn't be considering the Tuesday volume.
Right. Okay, I get you.
I'll be considering the Monday volume, this particular candle volume.
Right, I get you.
When this candle got broken, I could have bought. That's what I said, either year or year.
Right. Okay.
Okay, so the stop loss will just be around here. So it's actually 25 pips away from the low. So it's around this level.
All right, makes sense now.
Yeah. If you want to be more risky, stop loss can be, you can wait for the prices to close beyond the zones. Then that's when you know that you actually have to come out from the trade. That is if you're not using stop loss.
Okay.
Yeah, when prices move away from the zones, that means it should tell you that prices has changed its direction.
Okay.
So you have to come out.
So this dotted lines you have.
Yeah.
What do they represent?
They represent the candle where the volumes are.
Are you the one that put them yourself, or is it?
It's an idea. It's something that I saw in the market, and I coded the volume. I coded a indicator to suit what I saw.
Okay.
So after coding what I saw, then I started seeing the patterns in the market. Then I developed a zone 2 as well on it.
Okay.
So I'm looking at the candle that is generating the volumes. I hope you get me.
Yes.
Yeah. So that's I think that's for the volumes. I don't know if there's any question on the volumes, but I think that's basically it. So as I said, is this a simple way of trading? I don't want to do too much thinking. So you use the higher time frame to determine the higher determine the trend of the market. So then the question is, how do you determine the trend of the market? Just look at where the volumes are. Are prices above the volume or below the volume? If they are above, you are looking for buys throughout. You're looking for strong buys. If they are below, you're looking for strong sells. Now, while the market is moving, if the market is bullish, it doesn't mean that you wouldn't get any sell.
Of course, yeah.
So that means your sells you're taking shouldn't be something that going to ride the market with.
Quick in and out.
Scalping, in and out. Scalping, in and out. So then you come out.
It's like this GU sell you did here. This GU sell, for example.
Today sell.
Yes. I mean, it's a short. It's not it's a short. It's like a scalp.
Yeah, like
because the trend is
the trend is all up. So you should expect the market to be doing this or
fracture, higher, lows. Yeah.
Exactly. So this was actually a very deep correction.
Yeah.
Yeah. So
I think price should go up from here.
Yeah. So it should go up, or maybe it can still. The only way I'll see the market changing is when it breaks this volume.
Which one?
I'm coming. When it breaks this volume. Then I consider the market will continue coming down. But since it's still intact, this volume is still intact, hasn't been breached. I'll look. So I'm looking at Friday. This is Friday's volume, but it hasn't yet been verified until Monday. They are not okay. This is the Friday volume price.
All right, I get you.
Yeah, okay. So this today is still forming. Maybe another candle can come and nullify it. So I won't be considering this volume yet, but I'll be considering this volume and the volume on top. Now, if price is able to break this volume, but that means we are going all the way to the weekly volume that I actually said. That weekly volume that I pointed out.
So for now, a buy would only be valid if price breaks 36.03, yeah?
Like as in strong buys.
Yes.
But right now, prices as is stuck between the 36.0 what and today's volume. If price, that means the market will be ranging.
All right, okay, I get you.
Hello?
Can you hear me?
Yeah, what I'm saying is that means the market will be ranging.
Okay.
Here's the thing: the market is supposed to be beyond two volumes to determine actually the market the trend in 1 hour.
Oh. How do you mean though?
Like on Monday, market should be above two volumes.
Okay.
2-day volumes to consider the market is actually going up, like strong
right.
like strong up. I'll show you an example. But this is the weekly. This is not talking about. That's
yes.
Yeah. So this is what I'm actually looking at. The market will want to retest this volume there before a sell-off. That should be early part of next year. The market, yeah, I'm just a prediction. It can be false though, but that's what I'm.
Yeah.
That's what I'm
I
thinking.
agree with you.
Mm,
I agree with you.
yeah. So it's quite simple. So we are looking at the market to rally all the way. It's not going to be smooth. So it's going to be like this, like this, like this, like this, like this, like this. So when it gets to that volume over here, then we should get the market to fall. Not fall, yeah, but you get the market to fall to another volume.
But we don't have that volume yet.
Well, it is still forming. This is the next volume. This number. This is the next volume. 24. Well, that it has to fall. And this is a yearly, and then this is a yearly thing. You know, market was going to that level before the market started falling.
Yeah.
It was going to this level, this volume before the COVID came and came to fall, make it fall. So I'm guessing it has to complete that volume, then boom.
Okay, makes sense.
Now let me share you on a little secret on pound USD. Hello?
I'm here.
Yeah. Every year, the market has to move 240 pips away, above and below the open price of the year. Every year, it has to do that.
Okay.
So next year, expect the market to move 250 pips above and below the open price of the year.
At what point? Immediately or?
Yes, I mean the open price of the year. When the market opens, the price that it opens to the year. That's where you start looking at how markets move. So market will move 250 pips away and below.
Okay.
So you can capture your first 250 pips for the year. So when the market hasn't done 250 pips below the year and the market is up, you should know that the market will surely come down. Like for Conk, it will come down.
Right.
So
okay.
You can test this yourself.
Yeah, I'll back test. I'll just look back a few years.
You can back test.
So what's the sandwich concept?
Yeah, that one too. Hey, I'm going to take my food too. I'm coming.
Okay. Go and eat. No, go and eat. Go and eat.
No. If I'm just going to have to go and take my food, not to go and eat. If I have to eat, I'll be eating whilst teaching. But I want to see if you understand this volume part, because there's something I wanted to teach you before you're going out.
Yeah, I do. It seems pretty straightforward.
Okay, but there's two more questions. After going through the recording again, you can. What the fuck? What happened?
Has it stopped recording? It's still recording.
Yeah, but
can you hear me?
Yeah, but why did it resume share? Okay. All right. So this another chart that I use to monitor the ranges of the market and the rest. So this will show you the range of the market.
Okay.
It's actually a secret indicator. It's also another indicator that I created. Well, this particular one will show exactly the price that you can buy from and sell from.
How does that work?
Yeah. I'll show you. I'll get to it. But you see the blue lines. Those are the weekly open prices.
Okay.
Don't get too confused about distance. I'll think. Okay, let me alter the. Come on. Are you busy? Are you free?
Yeah.
Oh, it's 8 o'clock. You're serious. Oh man, I hate this thing. The VPS gets slow around Friday. I don't know if it's because if you're looking at I don't play on Fridays much, so it's also trying to be stubborn.
Friday VPS.
Come again?
I was just joking. I said Friday VPS.
Yeah. Okay, so you see the blue markings on the line on the chart.
Yes.
Oh God, what the fuck is this? Okay, have you noticed anything about the opening prices of the opening prices?
There are strong support resistance levels.
Okay, have you seen the middle? Have you seen the middle lines?
Mm-hmm.
Yeah, those are the weekly open prices. This is 4 hours, so this is weekly open prices. See how the market was. Let's say this is 20th of November to 26th. So you see how market came to on this day, that's December. The market came to play around this region before going up.
Yeah. Mm-hmm.
So this is not even about volume trading. This is just pure open price strategy.
Mm-hmm.
So prices came to touch, yeah. Then it rejected. Then you could have bought at this place, or you could have gone the quick buy, yeah, after the rejection.
Right.
Good. Now the following week too, it did something similar, but it actually broke the opening price. But it came all the way up to come and close above it before running up, before coming down again.
Mm-hmm.
Okay, doesn't make sense. Now what? But I see that
It makes
when
a
prices,
no.
this one it takes some time for you to get it because it's not something that people actually do. This part there, it's actually very simple. You see the engulfing pattern. Fuck. But the point is, markets like retesting open prices to continue its move.
Yeah.
Yeah, it does a lot. Many people don't see that, but I see that a lot. So let's
But you
say,
focus on one pair.
yeah. Focus, we get one pair exactly. So you see the engulfing. Oh God, what the fuck is all this? Okay. So it's because because I'm focused on one pair, I'm able to sit down and see what the market is all about and see what the market is doing.
Right.
Yes.
Right.
Yeah. Okay, you didn't finish with this one. Go and get a food. Then I'll save this recording. Come back and come and continue the sandwich with you.
Okay. Okay. Cool. That's
All right.
fine.
Then you see this engulfing pattern. Then market came to test the open price. This was the open price of the week. This particular candle. This particular price was the open price of the week.
Line. Yeah.
So we came to test it. Then it started going up. Started going down. Sorry.
Down.
Yeah. So that was a nice trade. In case you are selling, like that was a nice trade.
Yeah.
Yeah. So last week, this was where I took my profits from. And this was what I'm looking for. This is where I also sold as well. Because again, you touched
You're
last
hoping
week.
to get a sell. I said that's why you're hoping to get a sell earlier this week.
Yeah. So my first sell was here. Then I sold. So I was thinking I was going to ride it to this sandwich. There was a sandwich here. I was expecting the market to get there before going up. But it didn't get so. It just came to play around this region before going up. Which I realized it was a volume. That means the volumes you see here, there are no volumes. So we didn't know what is going on. Why the markets are returning from here. Okay. So, but I can tell you without I can tell the reason why the market returned from here. I can tell you without a volume. Will you bet?
What was the reason? The weekly
open price.
Right.
I'll show you why. I'll show you why it is. Now, what the market did was to come and test the monthly open price before going up. So these are some of the tools that I use in trading. These are the two tools. No, this is the third tool out of three. It's actually three tools. So this is the second one.
Volume, the open price.
Yeah, I'll show you the other one. The other one is actually telling you exactly where to buy and what to sell. Like the exact price to actually buy and sell.
Okay.
Okay. So the monthly open price is going to be in pink.
Okay. I used to have an indicator
Mm-hmm.
that showed me all the different monthly, weekly, daily
Daily what?
open prices. But
Oh, really?
I mean I wasn't using them, so I just discarded them.
Yes. That concept is something that discourages people. So you people will always trade away. Me, I'll take it and use it.
But remember that guy that I told you trades only GJ as well?
Yeah.
Yeah, he had all those tools. So he shared it
Because
with us.
because it works. You understand? See, you see here, MN monthly, right?
Yeah,
Monthly open
yeah.
price. What did price came to do? Right? Price came all the
Price
way after came the all the come to, but it didn't close below the open price, the monthly open price,
yeah.
right? It was rejecting
Mm-hmm,
it at this level.
mm-hmm, mm-hmm.
So your ticket is to buy here or maybe buy at where the candle close. So you see,
Yeah, maybe when price came to retest the weekly open.
yes. So you see, last week to the same thing. On Friday, market came to retest the monthly open price before
Monthly.
falling.
Mm,
Hope you understand.
mm.
Yeah. So you see, without volumes, you can still trade with the open prices. But the volumes will give you the exact thing to be thinking about when you want to trade. So the volume will give you the direction of the market. Then I use the open prices and other things to pinpoint exactly where I have to sell, when I want to buy.
Sorry, say that again.
I use the volumes for direction.
Okay.
Then I use the open price as and other tools to determine where to buy from my buy points.
Okay.
You understand?
Mm-hmm.
Good. Now, have you seen the weekly ranges that I showed on the chart? The weekly ranges.
Yes.
Good. So you see, you have 250, right? You have 130. So 130 was the lowest. I think last very small one. So, but eventually, like in the larger sense, market moves beyond. If it moves beyond
The
250
range.
pips, it drops. So you say that when the market moved 250 pips, in last 2 weeks, the market dropped. When the market moved, yeah, when it moved 250 pips, the market dropped, right? Boom, exactly. And yeah, from this low to this high was around 250 pips. So when the market got 250 pips on that week, then the market had to do what? Right?
Yeah.
So you just have to look
Be
at
mindful.
where you want to sell from.
Yes, I get you. Makes sense.
Yeah.
I used this your logic yesterday. I told a friend to sell um GU
Mm-hmm.
from 3600 because I remember you mentioned that if market has fulfilled its weekly range,
Yeah.
it will be looking for a reversal. And I
Yeah.
realized that GU had done over 300 pips. So
Yes.
I knew that a reversal was imminent.
Mm-hmm.
So at that round number, if you
Yeah.
look at GU H1, there was an engulfing pattern on H1
Mm-hmm.
at that round number. So I remember what you told me because it's not something I pay attention to. But after you said it, I started paying attention. And I
Okay.
realized that after GU had done, over 300 pips,
Yeah.
and it was at a round number, GU must drop. And, GU dropped yesterday
Okay.
till today.
I even forgot to even add the round number to the round number to also the tools that I also use in picking my trade. So it looks like we're actually in the same tune because that's what I also do. Like use the round number. So you see everything's in line. Everything's in line. So okay, so that's And you see, and what's the name? The weekly to the monthly too has its own range as well.
Yeah.
I'll share it to you. And also, this is what you should know. Every month, every day, every week, you should have a seller and a buyer below and above the open price. Let me repeat it again. When the market opens every day, you should have a seller and a buyer at the open price. Is it clear?
So how does that play out?
Meaning, when the market opens and you don't have any sellers, you should expect that the market will reverse and get some sellers before coming down.
Right. Okay.
So anytime you have a weekly candle without any seller, you should make sure that you should always put in mind that the market will hit a certain range and drop and come and fulfill its requirement.
Yeah, I get you.
Man, this thing is hanging again. I don't know if I should restart my router or something like that. I don't know if it's the connection, but it's the connection is fine because I'm talking to you and when it was you, man, it's smooth,
It's
right?
clear. Yes.
Yeah, so I don't know why
That's
this
clear.
BTS always fucks me up. I understand. See, that's gone down again. Okay, so I think we are in a way. So let me stop the recording. Let it finish compiling. Then I'll send that one to you. Then if I come back, we start the sandwich.
Okay.
Yeah. So I'm coming. Let me stop this. Stop recording. Or stop sharing. This is Rich. Or I can pause recording. And that will be too long. So let me stop.